Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the market recap for today, November 23rd. So, as you can see, Fed officials see smaller rate hikes coming soon. The FOMC minutes are showing. So, they expect to switch to a smaller interest rate increases soon. So, markets are pricing in December less than before interest rate hike. So this is very good news because FOMC minutes already confirm what prices were where markets were pricing in, and as you can see, we reached 11,900 almost at noon, and we started going lower because uncertainty. And then this happened. This is 2 p.m. FOMC minutes release. So after the decrease expected soon, markets started going higher again, and we are now consolidating higher and finishing the day strong at the same levels that we were during the morning, but right now confirming and already knowing that Feds are seeing less than previous interest rate hikes. This is good news. Dollar, look at this. This is the 2 p.m. candle, and obviously dollar is going down based on the news. Yields, the 2-year also in this candle pulling back, and the 10-year also pulling back. If we check the 30-minute, we are seeing weakness across all yields. As you can see, next year, April's, it's already pulling back from 9%, from 5%. Right now, 4.9%. And also, this is September, also pulling back of 5% to 4.9%. So basically, rates are going higher until 5%, a little bit lower perhaps, because this December, I think, is going to be 50 basis points, what is being priced in the markets. So I think we are going to reach 4.9. We are going to hold those levels, and then we can see a cut to 4.7%, as we can see, 4.68% in December next year. So this is what bonds markets are pricing in, and what the overall market was already pricing in, I think, because the move, we were pulling back this morning to basically the open price level, and then on news we push higher to reclaim those prices. So Nasdaq finishes strong. Stocks market, look at Tesla, 7.82%. The daily is looking quite strong, so a lot of people starting to buy this dip for continuation through 200 on Tesla. And Nvidia, 3%. Look at this. After a rejection of the 200 moving average, we bounce, we find support at 150, and we are now retesting the moving average. Semiconductors are looking quite strong. As you can see, we rejected this higher pricing of the 200, and we are now reclaiming. This is the sector fund. And I would like finally at last to highlight this XLY 1.44%. Consumer discretionary, now that interest rates are basically pointing out a decrease for December, we can see consumer discretionary 1.44%, XLK Technology 0.89%, and financial 0.42%. Also, we see utilities in the green and staples and healthcare, so still defensive after today's FOMC minutes. So money flow is not going full consumer, full risk on, but at least we are seeing some movements in the right sector funds for offensive, for bullish movements. XLY XLP ratio plus 1.10%, trying to do a double bottom here, and hopefully we can see a retest of this pivot that we had in early November. So energy, finally, we can see some weakness. This is XLE. We are not seeing a lot of weakness because we still have this bullish bottoming candle, but still minus 1% for the sector fund XLE due to crude oil. Basically, look at this. After this huge, massive bullish candle, look at this, anything can happen in the markets. So prices are being rejected again through all this session. Today's session minus 4.42% in crude oil, and natural gas minus 1.62%. But natural gas is looking quite better than, it's looking better than the crude oil, honestly. We are breaking this pivot, and most probably I think we can see a reclaim of even 8. So let me check this. This is the 8 level, 7.7, and we are seeing this breakout. So natural gas stronger than crude oil, but in general, overall, energy sectors are seeing a weakness right now, at the moment. So we finished the day quite strong. Based on fundamentals, FOMC minutes gave us the confirmation about Fed's looking to decrease interest rate hikes in December. So instead of the 75 basis points, we can look forward for 50 basis points. These are very, very good news. So if we check the 30-minute, we are now confirming the move higher, and I think we are ready to again fight for the 200. We still need to break 11,900, so tomorrow overnight and open price action is going to be key. Tomorrow futures open just a little bit of time, so I don't expect big moves tomorrow. Friday might be good to end the week strong, so don't get too confident, but at the same time I think we have strong fundamentals supporting a possible move to the upside, because Feds are now thinking about a possible pivot and a slowly decrease in interest rate hikes for December. So S&Ps finally trying, look at this, trying to break the 200. This is the key spot. Yes, S&Ps are stronger than Nasdaq. Nasdaq still has ways to go until the 200 up here, but S&Ps is now dealing with that, and also a little bit higher, the descending resistance that we all are watching. So I think we are right now stronger than ever to see a possible market structure change, and honestly I'm quite confident about that, but we will see what happens. We just have to be patient, but right now I'm quite bullish based on confirmed fundamentals on Fed's pivot. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time. I hope you had an amazing trading day, and see you tomorrow with the market forecast. Remember, discipline and risk management are key for success. Stay safe, everyone, and see you tomorrow in the market forecast.